Hello, everybody. Thank you for joining. This is one I did not tweet today on Twitter. It's Patreon only because some decisions were made today when I crunched over 8,000 numbers, and I can show you guys the receipts for those numbers too. But let's jump in and go through this. And again, I am very confident this is the best crypto, Bitcoin, quant you will ever see on the web, bar none. Nobody makes data-driven decisions like we do. So a lot of work goes on behind the scenes. Hit the like, subscribe if you haven't already. Again, this is a very detailed, the most detailed Bitcoin miner analysis you will find anywhere. And it has a proven track record of working. And I've added some new stuff in the data as well today. I keep on creating ratios on ratios, which is really fun. And again, I did take some action today, so hold on till the very end. Let's just jump in. Edutainment, as you guys know, not financial advice. The story today, really, so much has changed since early 2022, mid 2022, Q3 2022. A lot has changed, and really it's a story of capital efficiency, and we'll dig into all that. But a quick reminder for all of you who know, because all of this is really driven around Bitcoin and Bitcoin mining and the reward and how much these miners can make. So we are still, a quick refresher, the total number of Bitcoin mined per day is 900. And in April or March 2024, it'll be 450. And some miners we analyze do well over 20 Bitcoin a day. Think about that. Wouldn't it be nice to have 20 Bitcoin a day in your pocket? Yes, it would. So let's look at one thing first as well. This is the Bitcoin top and bottom indicator, and we are clearly coming out of the bear. I saw in the comment there's so much bullishness. There shouldn't be. Well, a lot of things indicate towards bullishness. Yes, it'll be a bumpy year. Yes, everybody's waiting for the Fed to do stuff. But again, the market's come an awful long way in a short period of time. Let's look at another thing as well that's very important is the miners have stopped selling. They're beginning to accumulate again. This is the first time pretty much in quite a while. And this chart represents when they are below the zero line and when they start accumulating. And related to that, this is the miner reserves. They now have 230,000 Bitcoin that they've been stashing away. The reserves are creeping up after dumping most of 2022 just to pay the bills. Remember, when the Bitcoin price is down, it's very hard to make this profitable. But at the very end, I show you exactly how much profit one miner can make on mining Bitcoin, and it's staggering. It blew me away. And remember as well, by the way, every chart you see is in that TABI model, top and bottom indicator. The hash rate is still on the rise. If you are investing in Bitcoin, you have to watch all of this stuff. And if you're investing in a Bitcoin proxy, which are miners, you have to watch them too. So let's jump in to the companies that I analyzed. There are 8 of them, all publicly traded, which means you can get a lot of information. And I'm going to go through a ton of charts. Each one represents hundreds and hundreds of numbers, so you can get a feel for what these charts represent and make your own decisions. And again, there are so many data points to create, at the very end of this, a composite score to rank all of the miners. But here are the price of the miners as of right now, and the market cap in US dollars as of right now as well. And again, some of them are way off their highs. We'll talk about that too as well. Let's jump in. The very first chart. This is one of my favorite ratios. It's the Bitcoin miner market cap divided by their exahash rate. And that is in blue. And you can see for this, you want it to be as low as possible, not high. You don't want to spend a lot of capital to generate a lot of exahash. You want to spend as little capital as possible to generate a lot. And the winner in this analysis is Cleanspark. Also, by the way, the red bar is the number of Bitcoin mined per month. You can see 3 of them. This is Cleanspark and Mara and Riot all do about 700 a day, which is stunning. And this data is from January 2023, fresh off the press. I had to wait to get all the data in before I could do this actual video, and now we're the 8th of the month. So next is the miner production, January 2023, and what has actually happened over time. And you can see that the miner production has actually bounced for many of them. And you can see the ones on the right, up and to the right, are the ones you need to focus on. And the winners here are names like Marathon, Hive, and Cleanspark. Now, next in the box, this is, again, to drill into this, I can't stress this enough. This is another visual of the market cap per exahash. as of January 2023. And again, winner is Cleanspark. Number 2 is Argo. Number 3 is Bitfarms. And then you'll see other names. Now, when you look at Hut and Hive, their market cap per exahash has actually increased dramatically. And that has been a bit of a surprise to me as to how the financials of these firms have actually changed over the last couple of quarters. Now, let's look at, again, Bitcoin mined per exahash. This is how much they get for the exahash that they have. Again, capital efficiency. And, you would imagine that this would be uniform for all. If you have 1 exahash, you should be able to mine a certain amount, but it's not at all. And here you can see the winner is Hive. They are crushing it, and they've come out of obscurity to do really, really well in a short window of time. Number 2 in the box is Cleanspark. Number 3 is Bitfarms, and number 4 is Marathon. And then down the line, I think IREN, which is Iris Energy, Riot, and what is that one there? I can't quite see. I got something blocking it. I can't see it. Hang on a second. Hut, and then Argo. So that my little controller is in the way. So that is kind of Bitcoin mined per exahash. Next is the HODL. Now, there was a time when I placed a lot of emphasis on the HODL ratio of Bitcoin miners because we all thought Bitcoin was going to fly to $90,000, $80,000, $100,000, and then it has a huge impact. But what we've noticed is it doesn't get there quite as fast as many people expected. So those that didn't HODL, I have to stress this as well, but took the Bitcoin that they'd mined, sold it to buy rigs so they could build up exahash capacity to mine more, the jury is still out. But I think those that actually sold off their Bitcoin and didn't hold it, especially during the downturn, if you're mining Bitcoin at a $42,000 price, $50,000, $60,000 price, you're holding on to it and the price goes all the way down to $15,500, you're better off selling it at $30,000 or $40,000 and buying rigs that were cheap on the market because so many miners went out of business. This is the interesting play here. So with this one, this is the Bitcoin HODL per miner. Marathon now have the biggest bag of about 12,000 Bitcoin. Number 2 is Hut 8, and number 3 is Riot on the left. And it's interesting because these firms in the past weren't really focused on hodling that much. And you've got other firms like Cleanspark. They just mine it, sell it, invest, mine it, sell it, invest, mine it, sell it, invest. But now they're even beginning to accumulate a little bit. And I think they have 309 Bitcoin right now in their bag, same amount as Bitfarms. So that is an interesting one to look at. Now let's look at the last 365 days performance of all the miners. And you can see here, based on Bitcoin actually fell only 45%, but the least impacted of all the miners is Cleanspark, only fell 53.86% over the last 12 months. Other names are a little bit mixed. You have Hive down 65%, Riot down 63%, Hut down 70.41%, Bitfarms down 75%, Mara 74%, Argo 80%, and Iris Energy 85%. So again, the least worst is Cleanspark, but again, Bitcoin beat them all, which is normal. But there are times when Bitcoin goes on a rampage, everybody will FOMO into miners, and miners will go on a rampage and they'll outperform Bitcoin. And that's what happened in the last cycle. Now let's look at some balance sheets real quick. I'm going to blast through the balance sheets and just talk about some high level things, because with this weak market, with the low Bitcoin price, we have to focus on liquidity and how well built these balance sheets are. We like to find companies with very little debt. Little debt is fine. No debt is good, but a lot of debt can be dangerous. So this one is Argo blockchain. And you can see here the debt is not well covered by operating cash flow, and shareholders have been diluted in the last year. I'll talk about shareholder dilution as well. Cleanspark, the revenue is forecast to grow about 50% over the next year. It is trading at a very good value compared to its peers in the industry. But they've also had dilution as well, but very little debt, which is good. Then we have Marathon. This has been a concern of mine for Marathon. It has less than 1 year of cash runway, and shareholders have been diluted in the past year. Again, that's a common theme. You're going to hear shareholder dilution, but we'll find out who is the least worst. Hive, balance sheet. Again, they're currently unprofitable, and they're not forecast to be profitable for the next 3 years. I'll talk more about the profitability of these things, and also shareholders have been diluted with Hive. Hut has less than 1 year of cash runway. Very volatile price over the last 3 months, unprofitable, also not forecasted based on these financials to become profitable over the next 3 years, and a lot of heavy shareholder dilution. And maybe, I'll jump back for a second, maybe some of this explains the merger, because they're probably nervous they didn't have enough money to cover the next year, especially if the price of Bitcoin remains suppressed. But they do have a very big Bitcoin bag as well on HUT. Riot, heavy insider selling, less than 1 year of cash runway, but bingo, no debt. That's a big positive. Iris Energy, balance sheet, 107 million versus the physical assets. Debt is high, but not too bad, but less than 1 year of cash runway as well. Then Bitfarms, less than 1 year of cash runway too. Very volatile share price, not forecast to be profitable over the next 3 years. Heavy insider selling over the past 3 months as well on Bitfarms. Now we're talking about share dilution. This chart is about that. And what I did, because it's not the same as some other reports I've seen flying around, but I went to Bloomberg and pulled up the share allocation today, check that with the market cap divided by the share price. And then I took that link of Bloomberg or whatever, Yahoo Finance, etc., and used the Wayback Machine to go back to 12/31/2021, basically the end of 2021. And that's where I could calculate the actual share dilution. Now, this is going to be an ugly picture for many, especially for people. They buy a stock and they think, well, there'll just be 1 million shares or 3 million shares or 71 million shares or whatever the case may be. But no, share prices can increase, and we'll talk more about that as well towards the end. But here you can see the winner is Marathon. They had the least amount of dilution, I think about 12% of all names out there. But the worst offender is Iris Energy, over 150% dilution. HUT, over 100% dilution. Again, going back to end 2021. And then other names you see in there, even Cleanspark had heavy dilution, 70%. Argo, 60%. Bitfarms, about 65%. Hive, about 55%, etc. So you can see Riot, about 45% dilution. So this is, again, an ugly situation. So you wonder why the stock price isn't going anywhere. Well, it's the same as crypto. When there's a lot of dumping, sell pressure, keeps the price down. Okay, so always watch dilution. Now, it can be justified if you sell stock, take it in, buy rigs, turn them on fast, and mint Bitcoin. Yeah, you can get away with it. But if you are not capital efficient, it's not a good thing. Next is Bitcoin value mined per month. Just to put things in perspective, this is the amount that they mine per month, say 700 times the current price of Bitcoin, which is 2,947. I have a model that calculates all this automatically, and it'll give you the actual numbers. So the three winners are Riot, doing about 16 million a month, Marathon about 15.2 million a month, and Cleanspark about 15.2 million a month. So that is nice revenue for these guys, especially if they're converting it to cash directly and reinvesting in the business. But you can see the amount mined per month for the other players is a lot less. And remember, Cleanspark came out of obscurity as well in the past. Now, this is my favorite ratio. This is one of my favorite ratios. I got many. But this is the Bitcoin return on investment divided by market cap per month. So what I did was I calculated the actual return per month of how much they get from selling their Bitcoin or mining their Bitcoin divided by the market cap, and you get a ratio. So if you look at the market cap of, say, Cleanspark today, they are generating over 6.2, 6.3% per month on that market cap in the Bitcoin that they are mining. And nobody comes close to these guys. The next highest is about 3.7% of Bitfarms, and Argo about 3.7%. And the other guys are all way down the line, like 2% Marathon, 1.7% Riot, and about 0.7% HUT. What happened to HUT? I don't know. They were a minting machine, very, very capital efficient. Something radically changed, and I don't know what it was, but the numbers now tell that tale. Now, let's look at some financial ratios. Is just stuff to keep an eye on. You will see here the things that are red I want to call out. If you look at earnings per share, minus $14 for Iris Energy, that is not sustainable. That means they're burning cash fast. If you look at Argo blockchain next year and Hive next year, losing $1 a share. Then I have a thing I call the upside model, where you take the analyst price targets versus where the price is today. And you can see that Iris Energy, 199% is the upside there, but also Cleanspark, 132% from that. But remember, Iris Energy are burning through a truckload of cash. So either they have to sell more shares to raise more capital or do something else. EBITDA, these are other very important numbers. EBITDA divided by market cap, another ratio I like to look at. You get Bitfarms 19.8%, Cleanspark 13.64%. But look at Marathon, minus 32.7%, and Riot, minus 10%. They are some ugly EBITDA divided by market cap numbers. Again, capital efficiency, I can't stress that enough. I threw in another one there as well, price to book, which you know, and the percentage gainers if the stock goes back to all-time highs. You get a 4x on Cleanspark, a 5x on Argo, a 4.3x on Bitfarms, etc., etc. But even Iris Energy, 853%. But can it make it? Not with that type of earnings per share. So that means back in 2022, some stocks just went on a tear, but there was no financials backing them up. So again, it's important to do this work to find out exactly what not to hold and what to hold. Next, and the final one, this is where I take the composite score across all of the slides and sometimes many other parts too, and I throw it into this big machine and allocate a score based on a ratio to come up with a final score. And you can see some do very well, like market cap over exahash, the number of Bitcoin mined, Bitcoin HODL, 12-month performance, the balance sheet strength, dilution, all the financial ratios, Bitcoin ROI divided by market cap. And I associated double points for this because it's so important. And Bitcoin value that they hold, etc. And come up with a total score. And this is the moment of truth, ladies and gentlemen, the funnest part. But before I jump in, I want to share one thing as well. Actually, I'll just jump in and show it. But there was our friends at Blockware, where the wizard Will Clemente works right now. They have a public Bitcoin miner score. And I don't know what this miner score is. I probably should, but I don't. And the price change over Q4 2022. So the price change, I know Core Scientific went bankrupt, so that explains that one. But Q4, some things had a big dip. Obviously, Cleanspark didn't have a big dip. But when you look at their analysis, it looks like their public Bitcoin miner score, Riot wins, HUT is second, Iris Energy is third, Hive is fourth. None of those come up in my analysis. In fact, my score is on the right-hand side here. You'll see Cleanspark 1 with 106 points, Marathon with 80, Bitfarms at 79, Riot with 73, and then Hive at 71. The rest, I don't know what happened again. HUT just completely fell out of favor, and maybe that's the reason they merged with another firm as we go forward. So let's jump into the conclusion. I'll spend a little bit of time on the winner as well, like talking about some kind of potential red flag too. But again, this is based on 8,000 numbers, financials, 26 ratios, capital efficiency, exahash, estimated earnings predictions, HODL ratios, etc., etc. Big take, I always say mining is a cutthroat business. Be careful out there. After cost of sales, electricity, mining rig depreciation, it's hard. Sometimes the cost of mining one Bitcoin today is between $10,000 and $14,000, depending on how modern your rigs are and how cheap your electricity is and all your other overhead. So again, the winner, and they've won 4 out of the last 5 times, Cleanspark, which is stunning. So they crush the overall composite score, just showed a little trophy. But I do have one concern, and they are requesting on a vote on March 8th, which is exactly a month away, for the company to increase the number of shares of common stock. I think the current allocation is about 100 million. They want to bump that to 300 million. And you know what that means. There's going to be more dilution. But again, if they remain ruthlessly capital efficient, issue the shares, generate the money, buy the rigs, turn them on fast, boom, that is okay for it to happen. Again, they're thinking about the long-term big prize. The big prize over the next, call it 2 years. No, not even 2 years. The next 15 months. Mine as much as you can before the reward falls from 900 Bitcoin a day to 450. That is the kind of the big issue. And let's look at another element. So remember, the dilution is very important to look at, but also a simple example of the math of where we are today. That's theoretical. I don't want people come back to me and say, you said this is going to happen. No, it's a theoretical model. Just so you understand how I think about Bitcoin miners. So Cleanspark today, they have 74 million shares. They're producing 700 Bitcoin per month, which is nice, over 20 a day. The cost of mining each Bitcoin is $10,000. So when Bitcoin price is $15,500, they're only making $5,500 per Bitcoin. But at this money, they're making $13,000 per Bitcoin. And if Bitcoin goes to 50,000, say at the halving within 15 months or 14 months, they could be making $40,000 per Bitcoin. Now remember, I'm going to step out. This assumes the hash rate remains constant. Of course it's not. I showed you the trend at the very beginning. It's going to go up. It's going to keep on going up. So it'll probably go up another 50% or even 100%. So that'll impact their profit as they go forward. But imagine if it did stay that same way and they're still making 700 coins a month and they're beating all the other miners with their capital efficiency. And 700 times 40,000 is $28 million of theoretical monthly profit, $336 million per year. Divide that by 74 million shares, you get $4.54 per share profit. Multiply that by an industry average of 18 or 20. That gives you a theoretical Cleanspark stock price of $90. So can Cleanspark get back to 20? Yes, it can, but we need Bitcoin to get above 50K first. And all of the things have to remain sort of equal. So that's why we play this game. You know, the price now of where it is. Let me remind everybody of where Bitcoin, the Cleanspark price is, not Bitcoin. We are now at $3.47. So it's a 7x if it gets back to 20. And if it gets to 90, it could be a 30x, of course. That would be extremely bullish talk. And I get into trouble for talking so bullish. But this is the magical math behind miners. Now, in number 2, we have Marathon. Now, Marathon, they have been holding and hodling a vast majority of their Bitcoin over the last 2 years. They have now 12,200, 12,300 approximately. And at the current value, that's nearly $300 million worth. They're also working with a joint venture out of Abu Dhabi, which is becoming the big global crypto center. They're creating 2 big mining sites in Abu Dhabi with 250 megawatts of power. And this will also give the venture, I think they're giving a 20% stake of Marathon, totaling about $80 million value to raise the amount of funds so they can invest more and hold Bitcoin more. So Marathon have done some incredible things. They still have not the prettiest of balance sheets, but that partnership kind of has taken away the fear of them being margin called or anything in the past that I had about 6 or 8 months ago. And finally, 3rd place. By the way, Marathon and Bitfarms are the first time ever on the roster. Bitfarms in 3rd place, and they have really impressed. Again, when I look at their ratios over the past few quarters, they've come an awful long way. So everybody, sorry about those 8,000 numbers, but nicely summarized. But you can see how important it is to do this work to be able to identify the winners as we go forward. And again, Patreon only 700 viewers here. Thank you all for being here. In full disclosure, I had a small bag of HODL today. I sold it. I'm looking for an entry into Cleanspark. A weekday, a dip on Bitcoin, a dip in the markets, and I will get more Cleanspark. Not financial advice. Do your own research, everybody. Thank you all. Bye.